Hello Internet, this is a video tutorial of the rental real estate analysis spreadsheet that operates in Microsoft Excel and is available from the Healthy Wealthy Wise Project website. Rental property is a major investment of time and money. The worst thing that can happen is you end up with a headache property that generates low rates of return, low cash flow, and that you have to hold on to forever. Investors should analyze these cash flows and rates of return before buying these properties. Don't buy on hope. Know your tax benefits, know your cash flows before you buy. And that's what this spreadsheet does. You can see there are 7 tabs in the spreadsheet that you work through in order. Beginning with the property information tab, just enter basic property and any notes you would like to collect on the property. Second tab is for loan and tax information. This is here where we enter the sale price, down payment, closing cost. You can analyze up to 3 loans on the property. Moving on to the income tab. This is where we calculate our gross operating income, and you can see it's set up for a single family property, but let's say you're analyzing an apartment building. Maybe there's 10 3-bedroom, 10 2-bedroom, and another 10 1-bedroom units. You can see the spreadsheet easily calculates your income for any size or type of property. You can enter your other assumptions here, such as annual rent increase and property appreciation that you want to model. We'll go back to a single family unit because that's what the rest of the spreadsheets are set up for. On the expenses, there's 3 methods to enter your expenses. If you have a direct estimate, if you want to use a percentage of gross operating income, or if you want to on a per unit basis, say for an apartment building. Other expense assumptions that are modeled are your increase in expenses, vacancy and collection losses, and sales commission. And that's the hard part. All of the data is entered at this point. The last 3 tabs are the analysis section, beginning with our first year summary. This is a full analysis of the first year of ownership, ending up with calculating important rental property metrics such as gross rent multiplier, which is similar to a PE for a stock, your cash on cash return, your cap rate, return on equity, and you can see how it calculates your initial investments and your tax benefits. We don't stop at 1 year. We go out a full 10 years based on all of the income and expense assumptions that you generated, and of course you can play what-if analyses with all of them. But the 10-year returns, you can review the estimates of gross and net operating income, cash flows, tax benefits. You can see the mortgage principal reductions on your loans. View the property appreciation based on your assumption of price increases, returns on equity. And finally, this models your sale proceeds, your cash sale proceeds, assuming you sell it at the end of each year. Also included is a debt coverage ratio, which is important to know. Should be greater than 1. And the last sheet included is one I've created that is basically a discounted cash flow model for rental real estate. And the reason I included this is because all of the general returns and cap rates that are used in the industry, they all have weaknesses. The cap rate doesn't account for your initial investment. Return on equity doesn't account for your selling expenses. So really this is meant to be a true discounted cash flow, looking what is our investment in this property, the initial investment of $36,000, and then what are the returns I gain over the following 10 years. And then you can, using the rate function in Excel, you can get your true investment rate of return. You can see if you sold this property after 1 year, you'd lose money, which is really to be expected on many rental properties. You're not going to recover that $36,000 in your first year. But if you hold it for 2 years, you basically break even on this property. And as you hold the property longer, you can see your investment return increases up to 14% in this case. And you can do some what-if analysis here. One nice thing that this worksheet tab does is it tells me how much of my profit relies on property appreciation and loan principal reduction versus annual rental income. And then in this case, about 2/3 of profit comes from property appreciation and debt reduction. So playing what if, we can go back to the income tab and say, what if this property does not increase in value? We can come back and we can see then we're at a loss for the first 2 years, breaking even after year 3. But at year 8, 9, and 10, we're still achieving a decent rate of return on our money. And we're about 50-50 on debt reduction and cash flows from rental income. So a nice way to quickly analyze your properties. You don't have to be a financial wizard. Simply enter basic financial data into the user-friendly forms, and the program automatically calculates all of your returns and formulas. Spreadsheet is recommended for investors who plan to buy and hold rental property. Provides a deep level of analysis for first year and 10-year holding periods. Analyze 1 unit or a multi-unit apartment building up to 3 loans. And again, it's available on the Healthy Wealthy Wise Project website. You can contact me through the website with any questions. Thank you.